trying something new here. Okay, I'm live. We're live. Yeah, Greg. So we're trying a couple of new things here to promote the show.
Okay.
Sending out the email as soon as we go live. What works better is we start a 10-minute countdown timer, so the show is actually live. So then we can send out the link. But I neglected to let them know that. So no big deal. We'll
Yeah, it
just
seems like we get a lot of people watching after the fact, which is good. They're at least
yeah.
watching.
Hey, they just can't ask us questions and try to stump us in the middle of it.
Yeah. I don't think that'd be too hard today. So
Well, yeah, it's right. It is it's a pick'em market.
it's something. It's something, that's for sure.
All
Never
right.
a dull moment. And I'll repeat this later when people tune in, but this is the 14th out of the last 15 session, Mike, where we've had a limit move. So
Really,
lumber doesn't disappoint. Oh yeah, yeah.
what
I
I love
think
is that you go expanded limits and you go limit down, but the limits were expanded because you were limit up.
yeah, yeah. I think of those moves, let's see here, one, two, only three, maybe four have been limit up moves. Everything else, 14 out of 15. So four have been limit up moves. The rest have been limit down.
Are
This
you
isn't
gonna?
necessarily a settling limit, but touching limit, on an intraday basis. And most of these have been actual settlements at limit, but just touching limit 14 out of the last 15 sessions, which is just mind boggling.
Are you going to share your screen?
Yep. You ready?
Sure, you can do that. All right. Yep, our guy just sent out the lumber futures. Oh, did you see the chart? I put it out that John Burns had sent out.
Was that the duty chart? Or no, which chart?
This was the number of homes under construction and permitted, and or permitted.
Yeah. And or permit. It was like over 17. It was like 1.7 something.
Yes,
It was a monster number.
correct. Highest ever.
Yeah, yeah, but that permit, that's just a nefarious number in that here's what we'd like to do versus the actuality of what we can do. And look, best case scenario that's a real number, and life is that good. There's all that business that lies ahead. But the permits, like just pulling permits in anticipation. There's a lot of things that go on behind the scenes, and talking to home builders as far as what a permit is versus the converting that actual permit into a actual sticks in the ground start.
Yeah, and then he just put another. John Burns put another data point out, and it was the amount of lots that the top public home builders have under control, which is an interesting distinction between bought and under control. So they have options basically on these lots. An example would be a farmer. You come in and the home builder, Toll Brothers, walks in and hands, or D.R. Horton gives a farmer who's got 200 acres a lump sum payment and says, I have over the next 5 years the right to buy this land at X.
Yeah.
So that goes into D.R. Horton's under control. And, now they bought an option. It's nothing different than that. So for the next 5 years, they could exercise the option, buy the land, and start the development.
That's interesting. I've never, I haven't heard of that. That's an interesting concept for the builders.
Yeah, it's great. The farmer takes in some income, right? Secures has a selling price, and then still gets to work his land. What it does is it allows the home builders to go through maybe the zoning process of getting that land turned over into, from agricultural into buildable permit or buildable zoning.
Sure.
I guess, speaking of that, And speaking of that chart we just talked about, number of homes under construction and or permitted, um, we have the runway to build more houses. Now, we all acknowledge there's a lot more limiting factors on how to build, or limiting factors affecting whether we can build them or not. You got your labor, materials, and that, but it's not land that's holding us back.
No, no, I think I don't disagree there. I think land is definitely part of the equation, but there's a cost associated. I don't think it's the availability as much as the cost. I think a lot of it again is supply chain issues, like I was hearing today. Again, the continued issues in sourcing engineered wood. Um, just all the pieces, parts that goes into a house, and then throwing to that the idea that interest rates are going to move higher. It's an interesting equation, to say the least. It's not a linear. I guess it is a linear to a point, but there's just a lot of variables that are very difficult to quantify to get the right answer here.
Yeah, I heard a new one, a new limiting material, which was concrete piping. So you're prepping, you prep your development, and you got to put some culverts or concrete pipe in. Evidently, that has become in short supply because of the rebar needed to build the concrete pipe.
Wow.
There you go, new one in the mix. All right, well, hey, let's kick it off. Lumber futures from the free seats. I'm Mike Wisniewski, CEO of Materials Exchange. Greg Kuda, the head bottle washer at Westline Capital.
That's a skill.
Yes. Hello, Greg. How are you?
Hi, Mike. How are you?
I'm
I
doing
was
good.
just telling Mike, and I don't know if we were live or not, but there's never a dull moment in trading futures. This is the 14th out of the last 15 trading sessions. So 14 out of 15, we've had a limit move in lumber futures. So you can wrap your head around that the volatility, it continues to accelerate when it comes to trading lumber futures. I think 4 of the moves have been limit up moves. The rest have been limit down. And again, this isn't necessarily trading limit up or settling limit up or limit down, but on an intraday basis, having a limit move. So, 14 out of the last 15 sessions we've had limit moves in lumber futures.
Let's just take a moment too to discuss how that limit number is calculated, and we're coming up to another change in how the size of the move to hit a limit,
Yeah.
which will be on May 1st, correct? I think it's May
Yeah,
1st.
correct. First, yeah, it will go into effect May 1st. Yeah, and they'll start calculating it. And if you know this, Mike, I believe it's 45 days prior to. I want to say it'll stop on April, and I could
15th.
be completely. Yeah, I think April is just April 15th. So 45 days prior to April 15th, they'll start calculating. The daily price changes, and then they'll adjust thereafter, starting, so it'll end April 15th. It'll go into effect May 1st. It's a semi-annual calculation.
I'm going to take a quick look. And there's a reason to know this. And let me, settlement personnel, we want settlement. We want, um, well, I'll find it in a moment. The reason you want to know this is the volatility on a day in and day out basis can be capped by the limit move, right? So when you're looking at option pricing, which, how options are priced based off of the perceived volatility. If you have, back in the good old days when the limit was $10 per day and $15 on an expanded day, you can have some confidence that if you were trading options that were well away from the current market, it was going to take time to get there, take some days. So with a higher limit move, you can get to those prices quicker, which creates a more volatile market, which is going to create higher pricing or higher perceived value on those options.
Yeah, and I'm sharing a screen here. Lumber volatility rolls. So this is a calculation of front month futures implied volatility going back to January 18th. And this is kind of the first foray above, substantially above $400, where we peaked out, at $659 back in May of 2018. So you can see the blue line is the volatility, and how we just, kind of what normal was predating this 2018 level versus how we've kind of evolved coming out of 2018, 2020 into current, where the volatility has just been massive. You get these massive volatility swings in both, the pendulum swinging in both directions here. So, what's the takeaway is the volatility is not going away anytime soon. As much
No,
as we want to rein this in, given the idea that we could see expanded limits again, we've got lumber trading at elevated levels versus the old historical type price levels. The volatility is here to stay for the foreseeable future.
yeah, prior to that, right at the beginning of your chart here, January of 2018, when I was very active trading options, my rule of thumb was you buy anything at 20 vol and below, and you
Yeah,
sell everything at 40 vol and above.
yeah, yeah,
Um, now, that didn't work after I think it was into probably
yeah. So
20.
this is that move up to 659, and then you kind of settled back down. And then, as we came into, here's your the start of the pandemic. We crater down to $251, and then you see the volatility on that spike lower, and then immediate spike back, and the rest is history. I mean, and just these kind of volatility swings, I'm sure they exist in other markets, but you're probably talking like Bitcoin, oats, some of these other wild markets where this is not a normal volatility chart, even for other volatile commodities, other volatile assets. That this is if not the king of all kings, pretty close here as far as the volatility.
Yep, that's no doubt about that. All right, I just found the daily price limit calculation, and you were correct on 45 days. 45 days prior to April 16th, they
Okay.
take the average settlement of those prices of those days and multiply it by 5%, and that
Yeah.
becomes the new uh, settlement. So,
And that's something that we calculate. So as we get into that window, we'll give periodic updates on these weekly calls, just to give people an idea of where limits potentially could move to at that point.
and it's trading days, 45 consecutive trading days. So, 9
Correct.
weeks. So, we're about ready to enter that period, probably.
Yeah, we're basically on the. I'd have to look at a calendar and count it out, but yeah, I think we're close to. The other thing I'll mention with the CME is that I know there was a big questionnaire that was sent out, asking people's opinions. The CME did meet last Monday internally, and we're hoping for some kind of closure as far as kind of updates to the existing contract, where I think it's a foregone conclusion, and I don't want to put words in their mouth, but the idea of delivery into Chicago, and the expansion of allowing obviously Eastern SPF, SPFS, and then also the idea of hem fir and Doug fir as deliverable species. So that would open it up to delivery to Chicago. Sawmills outside of Western SPF would have the ability to deliver into the contract. We're waiting on the exact specifics. The CME will put out a notice once they finalize that, and we're hoping that it's in the next. I'm hoping it's in the next couple of weeks to the next month. They've dragged this out long enough, and we're getting to that point now where we should have some closure as far as how this contract is going to evolve and when it will actually take place.
Well, I will work real hard to get my friends at the CME as guests when they make this announcement. And
Yeah, definitely, definitely. I
all
think
right, so
it's gonna be a good thing.
let's get into it. What's going on? What's happening today?
Well, I mean, lumber continues its free fall, and I just have this comparison chart we started to reference over the last couple of weeks. You can see crude week over week here is up 3.76%. Interestingly, lumber was mimicking equities. Well, equities have all bottomed here. The S&P is up 7% off of its recent low. The Dow's up 6% off of its recent low. Nasdaq's up almost 8.8% off of its recent low. And lumber, we tried to bottom. We stalled out last week with the kind of the ending of those limit moves, but we've kind of resumed it again here between yesterday and today. So lumber now off of its highs is down 28.7%. We keep talking about interest rate sensitivity, what lies ahead with the Fed, of interest. The 10-year has kind of settled down here. Interest rates have kind of settled down to where the 10-year as of this morning was 1.804, and that's down 3% off of its intraday high here a week and a half ago at 1.86. So for whatever reason, lumber, you probably could correlate lumber now to weather or a bevy of other things, but it's kind of detached itself for the time being from that equity correlation that we've talked about the last couple of weeks.
You know, I just highlighting the interest rate issue. Uh, you know, interest rates going up is a direct result of the Fed seeing that there's inflation happening. Correct. Um, Anecdotal evidence about new inflation in our lives. Um, the pricing at restaurants in Chicago has gone,
Yeah.
really ballistic. Um, if you want to get a mixed drink at any fine restaurant, it's $12 to $15. Um, you're looking at a steak is $65 to $85 for a steak. So I'm going to say restaurant food is up 50%. But what was really more shocking to me is I was grocery shopping this weekend, and the store shelves, in some cases, are empty,
Yeah.
like bizarrely empty of food. And I'm talking fresh, frozen food in the frozen vegetable section. I went to buy some frozen spinach. I couldn't find any. There was none on the shelves. And um, it's got me thinking. I don't have anything more about it than, wow, that was interesting. Sunday afternoon, there wasn't a whole lot of stuff on the shelves. Um, there's no doubt inflation is creeping in our lives. Now, if you have less disposable income, maybe able to save less money, um, are you going to be able to go out and get the new big house? I mean, maybe some people are, but um, I think we really need to be cognizant of how inflation is going to affect overall consumption of lumber via the housing market.
Yeah, and the one thing I'll add is in having conversations with home builder types, people that supply direct home builder, and then also private equity, and getting their opinion. And I'd love to throw this out there to the group, whether you can respond now or at some point. I think if not all, the business that is out there for Q1 into Q2 is set in stone. It's not going to be sensitive to interest rates. That's business that's on the books, that's going to transact. It's once you get into, that interest rate sensitivity seems to be a back half of Q2 into Q3 and beyond type event, where the business that lies ahead for spring of 2022 doesn't really seem to have much. Interest rate sensitivity is not going to have much of an impact. Now, where I think you could conceivably have impact on interest rates here, obviously, is in the refi type area where less people refinance. Once you get this initial surge of people, I better get ahead of this. That's where you could see immediate interest rate sensitivity, where there's less refis, people pull less money out of their homes to do the rehab renovation component. But where it looks like new home type building, whether it's multi or single family, the people that I consult with, the people that I deal with, they think it's a back half of the year event. The first Q1 into Q2 is kind of set in stone. That business is out there. That's going to transact, regardless of price. That business is out there. So I think
Yep,
that's kind of interesting.
agreed.
Um,
I'm going to share one chart here as long as we're talking about that. This was the John
oh,
Burns
that's
put this
okay. Yeah.
out. And this is just cool. And look, I don't mean to be the wearing the bear coat today. I'm just kind of pointing out a few things that are coming across my brain. And this one, housing inventory under construction and authorized but not yet started. Highest number on record, and we've been recording this for the last 45 years. So 1.7 million or houses have a permit or are under construction right now. So the last peak was kind of hauntingly, it was right at the end of 2005 and 2006. And obviously, you kind of saw what happened there. Um, I don't know that this is reason for alarm because I think there's enough demand to consume that. And if this was to roll over, make it kind of soft. But the reality is, there's the demand is so high, and we want to build houses. The reason we got to the prices we're at is because we're using up wood. There's no
So
doubt.
I kind of to piggyback off this, Mike. I see Kyle Little with Sherwood is on, and he kind of confirms from what he's saying as far as the headwinds are Q2, Q3, and beyond. So I'll ask Kyle. So the business is in the books. Is the inventory purchased, or is there still from what he sees, is there still a big spring buy ahead of us, as from an inventory standpoint? I'd love to know that, not only from Kyle, but everybody out there, because that seems to be the consensus, is that there's still this big inventory buy-in, for March, for March, really March consumption and beyond. So that's the other, interesting part of this equation here.
Yeah, and I mean, I can anecdotal. Materials Exchange had our record month in January, and people were looking to our platform to get product that they couldn't get through their normal channels.
Yeah.
The expanded network of our digital network, and we were getting orders where they said, "Look, it's got to be here in 2 weeks."
Yeah. Yeah. Good luck with that.
Yeah. All right, let me go back to your charts there. Get my stuff out of the way, and yeah, let's talk about what's going on right now.
And so here's your weekly continuation chart. Obviously, we're seeing this retracement off the highs here. 50% retracement, 62% retracement would put you, this is again on a weekly continuation, would put you down into the 921 area. So, you're 935, you're within $15 or so of that 50% retracement. You
And
can
I
see
got to say,
also,
lumber loves 50%. In
yeah,
you know,
yeah.
in my 20 some years of being involved in the lumber futures market, it loves to go back to 50% for whatever reason.
Yeah, and I'm just reading Kyle's commentary, and I would agree. The this is kind of interesting, and he mentions the multifamily is largely purchased for the first half, not for the second half. And we've seen it's just an insane amount of interest from private equity and multifamily, where in years past they would kind of farm out that responsibility to somebody else to lock in pricing. They didn't have to assume the risk. Now, anything beyond 30 to 45 days, they're assuming all the risks. So you're seeing guys that never would have been involved in lumber futures, or at least understanding lumber futures, truly get active as far as on the ground approach of having to source their inventory to quote these jobs this far out, where they never had to assume this kind of risk before on their own, where they're having to do it on their own. And the other thing I'll point out here, Mike, is that you're coming into the 50-day, the 44-day, the 40-day, the Bollinger Band moving average. So in this 920 to 900 to 875 area, there's a lot of technical support. So if the market is going to attempt to bottom, you're likely going to do it into somewhere into this range. We'll jump forward. Here's SPF 2x4 versus front month futures. And you can see from a basis standpoint, cash was trading $205 above. And again, print is the last print was 1,200. I don't think anybody really believes, cash is $1,200, but even if you can buy cash at 11.50, 11 and a quarter, you're still at a substantial premium to where front month futures are right now. I mean,
You're
March
not
is
hedging it.
930.
You're not
Yeah,
hedging
and
it
that's
for a
and that's
profit.
the other thing, where I think there's this game of chicken ahead with the buy side, with the mills, where the mills want to convince people that the reality is we're not going to come off dramatically. Futures have come off. So if you don't participate in futures, you're waiting to see, who has to drop their pants here first. Is it going to be the sawmills or is it going to be the buy side? And the tough side, if you're on the producer side of this, the buy side no longer has the luxury of selling futures at this big premium to hedge. There's no
So,
basis trade here for the buy side.
well, speaking of that, uh, a good friend of mine who's a buyer at a big regional lumber chain said he was kind of miffed. Is that 2 weeks ago nobody had any wood, nothing available. Maybe in March. All of a sudden this week they had prompt trucks.
Yeah.
He's like, where did this come from? I'm like, well, that was all that basis traded wood that was locked up. The wood's on the ground, but they had such a loss on their futures side they couldn't sell the wood. Now all of a sudden the futures has given them this big opportunity. They picked up the less of a loss on their future side, and they can come to the market with that wood. Now that becomes a bit of a snowball effect too, because now the market gets flooded with wood. So we talked about this back in December when we said you take a time horizon of 4 weeks and you buy 8 to 12 weeks, maybe 16 weeks of wood in 4 weeks. What happens to pricing? It goes up because perceived demand outpaces the true supply in that 4 week time horizon.
Yeah, and again, the other thing I'll add is that I see no appreciable build in on-the-ground inventory for distribution, end user types, where even in areas that typically slow down because of weather, there doesn't seem to be this big on-the-ground build of inventory. That being said, I still think, and when we said this when we peaked out, it had less to do with pricing, it had everything to do with timing. I still think the whole same holds true from a bottoming standpoint. It's going to have less to do with the price as much as the timing. And I think people will have comfort to all jump through the same hole at once if they know that the market's bottomed and the business is staring them in the face versus, why do I need to speculate at this kind of premium in physical cash when futures is down here? Even if I'm not buying futures like you should be, why am I going to speculate on owning cash if it's not going to transact for another 6 weeks to 8 weeks, and the wood that I've got on order still can't get to my yard? So there's all these variable supply chain logistical issues still in play, and I think it becomes less about some magical price in futures or cash as much as it's just the timing. And when people get the sense that we've bottomed, or you get to that point in time where we have to do something, then people will do it, and I think they'll more than happily chase this market $100 higher if they think that we've bottomed.
Sure.
I'm gonna just jump through. So here's the March basis from a week ago. We were about $171 discount under cash. Jump forward to today, and this is based upon, again, printed 1,200. I don't think anybody believes cash is 1,200. You're up to $265, and I'm going to just jump back here. So this puts it into perspective. Back in 2021, and this is kind of when futures peaked out relative to cash. You went to $277. The most extreme level was back in the September expiration of 2020 at 353. So, what a difference, 4 weeks makes, 3 weeks makes, from having this discount in cash relative to futures to seeing futures go to this massive discount to cash. So go
Yeah,
back to the
can you
basis.
can you throw up the March chart real quick
Yep.
for a second? Something I'd like to point out. This is the way traders think, and an old boss of mine taught me this. He was a huge trader in the S&P 500 pit, independent. Like didn't work for Goldman, he worked for himself. He basically said when all your indicators are pointing for the market to go one way, and the market goes a different direction, you know that there's something going on that you can't see or isn't being measured, and you have to respect it. And his attitude was you go with it. So I'd like to point out two things. First, when we when we rolled over, just after the peak there, it started falling. But I think it was about 3 days later, the housing start number came out, and it was a
Yeah,
great.
this is that bar right here.
That's the bar. It was a great number. Like, it was really good news. So when bad things happen on really good news, it's got to tell you something. I remember that day distinctly. We rallied, and what I was looking for was, okay, we're going to go back up and test the highs. And by noon that day, it had already rolled over, and we went limit down.
Yeah, no, I think when you look at it, this is your outside reversal. We traded up to about 311, 1311, and then failed miserably, and then the rest is history. Yeah, I
Right.
agree. It was a day
So
where, housing starts were positive, and we still finished. I don't know if we finished. Trying to remember if I think we did finish limit down that day. I can
we
tell you
did.
here.
So that's
Yeah.
the first indicator. The second thing was we just had this massive 7 days in a row limit down, and you and I were describing, what probably is going on is these funds are caught long. They couldn't get out. They couldn't get out. And I, for one, really anticipated a massive bounce off of that when they finally were able to get out. And I thought we would have overshot. And then we have what's going on today.
Yeah, and we'll jump into the open interest where, here's the May basis. A week ago, you're at 272. So today you're about $315. July, you're about $340. So, the one discouraging thing when you look at lumber futures, March is not acting like a front month. Well, let me rephrase that. It's acting like a front month to the downside. It's not acting like a front month to the upside. You're getting these other months to go, like Friday when we were up hard, limit up. The back months led everything up first before March finally locked limit. If we when we truly bottom, March will act like a front month. The idea that anybody has a crystal ball and can say that somehow May is going to be better, July is going to be better, September is going to be better relative to March, it's the beginning of February. March is your front month. March will act like a front month when we bottom out. It will go up harder. It will lead all these back months up. The fact that these back months, there's more interest from an open interest standpoint to build in the back months. I get it. It's the cheapest wood out there. You want to lock stuff in. But from a technical standpoint, March will need to act like a front month when we bottom. March will go limit up first and lock limit. It'll have the biggest pull relative to these other months, and that still needs to happen. But right now, March is acting like a front month going down, and that's got to change. To ultimately say you're going to bottom, March needs to act like the front month going higher here.
Yep, exactly.
And so here's March, May. A week ago, we talked about how the spread was being artificially held with those limit moves, basically in that $100 area. Fast forward, you've traded into the 48, traded as low as 46.80 today. So that spread has finally started to collapse in. I think on this move, you somewhere between here, maybe you get into 25. If this is going to follow suit with the previous three expirations, I don't think it does it now. I think that's a month from now, as you get into the end of February, beginning of March. And then here's the May, July, was up in that 87 to $80 area. You finally collapsed into the low so far today is 22.70. So once these contracts came off limit, you were able to actually reset the months based upon where the actual spreads were trading. And so that's kind of why you've seen everything kind of detach itself from March to May, May to July, July to Sep, is that you're just kind of normalizing where the spreads are actually trading. Here's open interest. This is the confusing part to me anyway, Mike, is that when you look at open interest, we flatlined. A week ago, we were in 24.59. 2 weeks ago, we were in the same range. Today, we're 24.11 up 24. There really hasn't been this massive liquidation of the March contract that's indicative the commodity funds got out. It looks like whomever is getting out is either being replaced by new longs or new shorts. And, amazingly going into, last Thursday, the market opened limit down. The 3 days prior, I think we traded collectively 120 to 140 marches. That Thursday, where we open limit down, the shorts that were, this is my opinion, were pushing this thing lower, decided to short cover. I think in that first hour of trading, we traded well over 600 March contracts. We traded almost 1,000 for the day. So it just seemed like the shorts, okay, we're going to let the longs out, but then they kind of reset and are still trading from the short side. So, my point is, and you'll see this with the CFTC numbers, as much as I want to say this is, this is happening, the funds are doing this, the funds are doing that, there's really no empirical evidence here with open interest. You look at the CFTC numbers, this is last week, there's no real change. You see,
Well, we didn't. You can't expect the change because we were really locked on the limit. We'll see
right,
it in
right.
this next report.
Yeah, you should, but again, total open interest hasn't changed to where that's the, typically, okay, funds get blown out, open interest goes from 2,400 down to 2,000, 2,100, 1,900. You have the evidence that the funds got taken out of their position. There really is no, and you know what? I picked hang on one second. I picked
Yeah,
the
that's from
wrong
the
chart
20.
here. Well, no, this is the most recent. I picked, instead of the disaggregated, I picked the wrong one. So let me just drag this over here. Here's the disaggregated report. Can you see
Okay,
this
there we
now?
go. Yep.
Yeah. So you can see the managed
Can you
money. This
zoom
is
in just a
the.
little bit?
Yep. Let me see here.
The,
Let me see if I can. Here, let me
the
do it
three
this way.
dots, and then that'll give you the zoom.
Yeah. Give me 1 second here. Sorry.
What
Give me.
the I'm looking at that long 700 commercial longs. That's the number we need to write on the whiteboard and say, okay, what's that number next week? What's on Friday? What are we going to see? And it's the longs measured as of the end of today.
Yeah. Yeah. And I'm sorry. I hit the wrong button here, and
Oh, now we're on the African safari.
yeah.
Oh
One
no, that's
second
not,
here.
that's a cougar. That could be out west.
That's my screensaver here. Hang on 1 second. I just I moved it, and I don't know where I moved it. Now here it is. Hang on 1 second here. I have massive screens, so it's deceiving what I think you see versus what I
Well,
see here.
the number that I was interested in is that 700.
Yeah, and
700
I'm sorry. It's I'm just
uh,
gonna have to technical
700 spec
difficulties.
longs in the managed money.
Yeah, and so we're not gonna. I thought we would get an indication of this number last week, the 720. But you're going to have to wait until this Friday, and we'll see, to what if, is this really the managed money, or is this the other part of this is you have this massive non-reportable position, 925 and 818. So, is this going to be down dramatically? Is this going to be up? I don't think there's an obvious answer, and you might not get that obvious answer on Friday like we hope.
Um, I'm going to say we're going to
So
get a pretty big answer on Friday.
I hope so. Yeah, I think it'll give clarity for sure on what's going on here.
I think you'll
Uh,
see that 700 off by 400 minimum, potentially even 500 out of that.
yeah, I think that would make the most sense for sure. So we'll go again. Here's these implied volatility charts. So again, we showed this last time. Here's a 2-year histogram on lumber pricing. So we're getting used to trading in these higher price bands versus this is what we've come out of. Prior to 2018. Like it was a rarity to trade over $400. I remember I used to have a chart called the 400 Club. How rare it was to trade over $400, and now we're having to get used to trading at much higher levels. So this is your old reality. This is your new reality moving forward. Where does this market belong? Is it 500 to 750? Is it 750 to 1,000? Like so somewhere in this 500 to 1500 area becomes a realistic trading band for lumber. And that's just going back to this chart here, the implied volatility is not going away. You're going to
No.
trade in these massive price swings, price ranges for the foreseeable future. So you might not believe in futures, you might not use futures. It's amazing how going up, the sawmills love the benefit of futures trading at a premium to cash. They get to raise their pricing. Collectively, they don't do what they should be doing as far as utilizing futures. And then to the downside, everybody gets upset. Well, this isn't reality. Well, it might not be reality for you, but it's reality for somebody that's short this market, for somebody that's long this market.
Greg, I think we might have to wrap it up. We're getting to the 30 to 40-minute range here. Do you got any other charts? We covered our
I just want to
opening chart.
show that rail continues to struggle here.
Okay. Yeah.
I think this is going to be a rough week from a rail standpoint. And then this is the big one. You can see Canadian rail continues to show slight improvement. But again, from a timing standpoint, the worst is typically used to come before you turn the corner. And that's about it. Oh, the other thing, Mike, last chart I promise here. Department of Commerce announced the preliminary duties that'll change. They'll probably go into, if there's not a delay, they'll go into effect the end of August, September of this year. But you can see, everybody's going to see a significant reduction based upon the higher prices over the last year. So this is what lies ahead for the sawmills as far as what they're paying, starting probably the end of August, beginning of September, if everything isn't delayed like it was over the last year.
Yeah. I got my big takeaway right now is the upswing is the trend has been broken. You're starting to see the market move lower on good news. It's moving lower when you historically would think it would have moved higher after certain events that normally would make it bounce. I'm very suspect of bull moves here. I like that 50% retracement level, and if we can't hold 50%, then in the shorter term, we're probably looking for continued lower prices.
Yeah, and all I'll say is that understand your own risk. And if you're a southern yellow pine guy, can you substitute a different species? Can you buy SPF in lieu of southern yellow pine? Your greatest risk out there is southern yellow pine. The idea that southern yellow pine mills aren't going to figure this out from a production standpoint is ridiculous. That will be the dominant species. They will figure out the production. That's where the production will come on. So you will get a big increase in production at some point out of southern yellow pine mills. So when you look at the different relationship between the different species and futures, okay, this is your cheapest wood out there. That doesn't mean it has to appreciate. It can go lower, but if March is going to go from 934 to 850 or 800, you're not going to hold cash at $1,100. It's just not going to happen. You're going to see everything else take it on its on the chin. You're going to get this reversion, back to mean type relationships with the different species along with futures. So at least understand your risk to reward in that futures doesn't mean it has to go higher, but futures is the cheapest wood out there right now. So for
Yep.
those that are planning for in anticipation of what lies ahead beyond the next 45 to 60 days, this is the perfect environment for the forward type guys.
Right. And I think you highlighted, Greg, these spreads are coming in. September is trading just above $800. So, September wood, that's this fall, that's late Q3 wood. So while we've come off these highs, historically, we're still expensive. But you're getting a discount off of the current market. So if you want to cover some business and business that you have on the books, which everyone has acknowledged, and I know of builders who do have business throughout the whole year that they could be buying in for. It's definitely looking better today than it did 30 days ago.
Yeah, and again, all the price curve is trying to tell you is that there's normalization ahead, at least for now. The idea that you're going to predict what pricing is going to be like in September, when a market can't even predict 2 weeks from now. The one thing you're going to predict is the volatility. So at least understand your risk and what you're trying to accomplish. And Kyle, it's tough to be short $300 under cash. Cash is your best sell. If you
Yeah.
can avoid buying cash right now, and again, you have to do what but at least understand the risk to reward when you look at the price curve with futures to the other species, and just lay out your own risk. I mean, that's my one parting advice is understand your own risk, because the volatility is not going away.
Right. Well, hey, lumber futures are great. They allow you the opportunity to make a decision. Absent of lumber futures, how do you make a decision for September business that you would have, October business?
Yeah,
So
absolutely.
they are a friend, not a foe, as is Greg. Greg Kuda, your friend here. If you need any more
I
information,
appreciate it.
or he's a great licensed broker, or not licensed, certified futures broker with Westline Capital. You can call him up, open up an account, and be trading in the next day or two. Materials Exchange, of course, is the digital marketplace to buy and sell lumber. We're growing. Like I said, January was our best month ever. We'd love to have you on board. If you're out there listening and you're not a user of the platform yet, give us a call. We'd love to have you on. Take advantage. I tell you, I'll be straight with you. The pricing on our platform today is under where the mills are selling at. It's
Yeah,
just
and again, that's a great thing. Price discovery. This is, float to the real market, and the sooner you can float to the real market, the sooner the sooner you can bottom and move on. And I think price discovery is key here.
yeah. I'll give you. Here's a nugget for you. We sold 2330 seconds OSB yesterday. Nashville equivalent of about $1,300 on some volume. So from what I can tell, that's probably the best price we've seen in the market.
Yeah, yeah.
All
I
right. Thanks,
appreciate it.
everyone.
Thank you.
We'll talk to you next week. And the big thing we're looking for, commitment of traders report. What happened to those spec longs?
I appreciate it, Mike. Thank you.
Bye.